Hey, what's up everybody? It's Amal. I'm pumped to have you here today as we dive into the fascinating world of stock charts. Now, before we get started, just a quick disclaimer. I am an AI chatbot and can't give out financial advice. The stock market can be a roller coaster, so remember, past performance doesn't guarantee future returns. Got it? Good. Today we're going to break down this whole reading stock charts thing into manageable, bite-sized pieces. Whether you're totally new to investing or you've dabbled a bit but want to level up your skills, this step-by-step guide is for you. We'll be covering everything from the absolute basics, like what those lines and squiggles actually represent, to identifying trends, spotting potential buying and selling opportunities, and even dipping our toes into some slightly more advanced technical analysis techniques. By the end of this video, you'll have a solid foundation in understanding long-term stock charts and be well on your way to making more informed investment decisions. Let's get started. Alright, let's kick things off by getting familiar with the basics of stock charts. Think of a stock chart like a car's dashboard. It's giving you a visual representation of a stock's price history over a specific period. First up, we've got different types of charts. The most common ones you'll come across are line charts, bar charts, and candlestick charts. Line charts are the simplest, showing you just the closing prices of a stock over time, connected by, you guessed it, a line. Bar charts, on the other hand, give you a bit more information. Each bar represents a specific time period, and it shows you the opening price, closing price, highest price, and lowest price during that time. Now, candlestick charts, they're the heavy hitters. They look a bit more complex, but trust me, once you get the hang of them, they're incredibly useful. Each candlestick also represents a specific time period and shows you the open, close, high, and low prices, but they do it with a cool-looking body and wicks. Next, let's talk time frames. You can view charts in various time frames, from daily charts that show you price movements for each day, to weekly, monthly, and even yearly charts. The time frame you choose depends on your investing style and goals. Short-term traders might live and breathe by the minute-by-minute charts, while long-term investors often focus on monthly or yearly charts to see the bigger picture. Finally, no matter what type of chart or time frame you're looking at, there are a few key components you need to know. The x-axis, that's the horizontal line at the bottom, represents time. The y-axis, the vertical line, represents the stock's price. And then you've got volume, which is typically displayed below the price chart as a bar graph. Volume shows you how many shares of the stock were traded during each period, giving you an idea of the stock's liquidity and trading activity. Now that we've covered the basics, let's talk about identifying trends. Trends are basically the overall direction that a stock's price is moving in. The first and most obvious trend is an uptrend. In an uptrend, you'll see the stock's price making higher highs and higher lows over time. Basically, the stock is in a bullish phase and investors are feeling optimistic about its future prospects. On the flip side, we have downtrends. Downtrends are characterized by lower highs and lower lows. The stock is in a bearish phase, and investors are selling more than they're buying. Now, not every stock is going to be in a clear uptrend or downtrend. Sometimes a stock's price might just bounce around within a certain range, not really making any significant upward or downward progress. This is called a sideways trend or a consolidation phase. Think of it like this. An uptrend is like driving uphill, a downtrend is like driving downhill, and a sideways trend is like cruising on a flat road. Each trend provides valuable information about the sentiment surrounding a stock and can help you make more informed trading decisions. Alright, now let's talk about support and resistance levels. These are like invisible barriers on a chart that can give you clues about where a stock's price might reverse or break out. Support is the price level where a stock tends to find buying interest and bounce back up from. It's like a floor that prevents the price from falling further. Imagine a trampoline. When the price drops to a support level, it's like hitting that trampoline and bouncing back up. Resistance, on the other hand, is the price level where a stock tends to encounter selling pressure and struggle to break through. It's like a ceiling that prevents the price from rising further. Think of it like trying to throw a ball over a high wall. The ball might hit the wall, resistance, and fall back down. Identifying support and resistance levels is crucial for making trading decisions. Why? Because these levels can give you an idea of potential entry and exit points. Buckle up, because in this chapter, we're diving into the fascinating world of chart patterns. Chart patterns are like formations on a stock chart that can provide valuable insights into future price movements. Think of them as clues left behind by the market, hinting at what might happen next. One of the most well-known patterns is the head and shoulders pattern. Just like its name suggests, this pattern resembles a head with two shoulders on either side. It typically signals a reversal of an uptrend, meaning the stock's price could be heading downwards. Then we have the cup and handle pattern, which, you guessed it, looks like a cup with a handle. This pattern usually indicates a continuation of an uptrend, suggesting that the stock's price is likely to keep rising. Triangles, flags, and pennants are other common chart patterns that can help you anticipate potential breakouts or reversals. Triangles form when the stock's price consolidates within converging trend lines, like a funnel getting narrower. Flags and pennants, on the other hand, resemble their namesakes and often signal a brief pause in a strong trend before the price continues in the same direction. Now, if you want to take your chart analysis to the next level, you can incorporate technical indicators into your toolkit. Technical indicators are like mathematical calculations based on a stock's price and volume data, and they can help you confirm trends, identify potential overbought or oversold conditions, and even generate trading signals. One popular indicator is the moving average. It's a line on a chart that represents the average price of a stock over a specific number of periods. For example, a 50-day moving average shows you the average closing price of the stock over the past 50 days. Traders often use moving averages to identify support and resistance levels and to determine the overall trend of a stock. Then there's the Relative Strength Index, or RSI. The RSI is a momentum oscillator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock. It's displayed on a scale of 0 to 100. Another widely used indicator is the Moving Average Convergence Divergence, or MACD. The MACD is a trend-following momentum indicator that shows the relationship between two moving averages of prices. We've covered a lot of ground today, from the basics of chart types to more advanced concepts like chart patterns and technical indicators. But here's the thing, mastering long-term stock charts takes time, practice, and a whole lot of patience. Don't get discouraged if you don't become a chart-reading wizard overnight. Start by focusing on the basics. Learn to identify different chart types, time frames, and key components. Then, gradually incorporate trend analysis, support and resistance levels, and maybe even a few simple chart patterns. One of the best ways to learn is by doing. Open up a free charting platform like TradingView or Yahoo Finance and start practicing with different stocks. Look for trends, support and resistance levels, and chart patterns. See if you can spot potential buying or selling opportunities based on what you've learned. And remember, patience is key. Don't expect to get rich quick by trying to time the market perfectly. Focus on the long term and let your investments grow over time. So there you have it, guys. That's your beginner's guide to mastering long-term stock charts. Remember, this is just the tip of the iceberg. There's always more to learn and explore in the world of technical analysis. As a quick reminder though, this video is for informational purposes only and shouldn't be taken as financial advice. It's crucial to consult with a qualified financial advisor before making any investment decisions. They can help you create a personalized plan that aligns with your specific goals and risk tolerance. Thanks for tuning in. If you found this video helpful, hit that like button, subscribe to the channel for more awesome content, and don't forget to ring that notification bell so you never miss an upload. Until next time, happy charting.